My name is Naeem Aslam. I come with a wealth of over 15 years of trading experience. During this time period, I have worked as a hedge fund trader for Bank of New York Mellon, with Bank of America as an equity trader, and currently working as a chief market analyst. And it is my true pleasure to be with you guys, as always, on the Wednesday. At this particular time, we hold our series of masterclasses, during which we give you an opportunity to ask you to give you opportunity to ask me as many questions as you can, so that I can really help you to become a good trader. Because remember, being a good trader means creating a discipline, following the rules, gaining more education as you go along, because the markets are constantly changing, and staying completely equipped with all the new information in terms of our stock markets, in terms of our techniques, in terms of our price levels, and really listening to professionals, and then see what you can really learn from that. So that is why it is very, very important. Hello, Declan. Hello, everyone. Right, okay, so as a series of few questions, I just wanted to ask you guys a few quick questions. Please say yes if you have attended any of my previous webinars. Okay, Robin, thank you. Good to see you. A lot of other Andreas is here. Rajev hasn't attended it. Leonard has. Parvez has. Margaret, no. Declan, thank you for watching the YouTube videos. That is where we are coming towards, and we'll be talking about all of that. Right. Okay. So let's continue, because I don't want it to delay this particular process, and I just wanted to get into it, and I wanted to go straight into our stock stories, because a lot is happening, folks. So in terms of our risk warnings, anything which we'll be discussing in this particular video cannot be perceived as an advice. If you are seeking for, and please do consider consulting with your own financial advisors. Now, as always, the most important thing for you guys to understand in terms of our content, let me just correct this one second there, and let me add another YouTube channel, which is my YouTube channel. Here we go. So let's go back into full screen. Now, it is very, very important for you guys to make sure that you are getting the correct information, and you're getting the information on time, because there's nothing more important than that. Because if you are following the game stock, because obviously this is a series of masterclass on the stocks, and GameStop is going mental, more than 600%. You wanted to stay, you wanted to get all that information straight away. And then of course this is very much of an earning season, and that means you also need to stay abreast of all those information in relation to stock earnings. So where do you get all that information? You get all that information from Twitter, because the number one is that the general media, such as CNBC, Bloomberg, and all of that, where I do contribute on a regular basis, on a weekly basis, and I do TV interviews with them, it takes time for that information to come to you. But with Twitter, it is so quick. You get the information straight on your mobile phone in terms of a notification, and that is the key, guys. That is the key. So you can see as of now that I'm getting these notifications straight on my phone, because I'm also following big names as well. And so it's all of us collectively sharing. And even when you be tweeting something, I'll be also looking at that and making myself aware what exactly you guys are thinking or not. So that is why Twitter is very, very important. I'll show you guys on Twitter account how to really go about it and what to do it. So why don't we do that first? So on Twitter, this is my account. As you can see, this is the handle of the account is the Naeem Aslam 23. As you can see, I am pretty much tweeting throughout the day, and then really important videos are being posted over here. Earlier we talked about Bitcoin, how low it will go, and that information is really there. So again, make sure that you follow that, because whatever goes on a YouTube channel, we also do it over here as well. Now, with respect to AvaTrade, make sure that you're following the right account, which has a tick, because there are so many scammers out there, and on AvaTrade is a verified account. It is a bona fide account, so make sure you're following the right one over there on Twitter. Now, in terms of a YouTube, guys, on a daily basis, we are doing two different videos. Number one is the live transmission that happens between 9:30 to 10 a.m. between that time period, a UK time, and this gives you the opportunity, as you can see this particular screen right over here, is is talking about today's market move, why the market is really moving. This was a live video, 20 minutes to 15 minutes to 5-minute video, and that gives you an opportunity to ask me as many questions as you like, and then I will answer those questions back to you. And if there is anything which is talked about in that video which is very complicated, come back, put comments on them, and then ask me, and then I will reply back to you. And make sure, guys, because we got over 70 people in this webinar, make sure that you are subscribing. That it is very, very, very important. I cannot stress enough that how important it is for you guys to really to subscribe to those channels, and making sure that you're getting all the information on time. Of course, it helps us on YouTube as well, but more importantly, it helps you. This is AvaTrade's a YouTube channel, so once again, make sure you hit that subscribe button, which is right over here, and then you are subscribed to that. Look, there are so many different actions. You can be sitting here and then just listening to me and then not paying attention. That will not get you anywhere. What you should be doing is listening and acting and taking actions. This is a free information for you guys, so why wouldn't you subscribe? Back in days when I was on becoming a trader in 2005 and 6, I was really hoping for this sort of information to really come and to become available. So I cannot stress enough for you, for your own benefit, to really subscribe to these channels so that you get all the information. And then you see we have, you get all the information in your on your mobile phones, and of course that will help you to become a better trader. All right, so I don't want to keep pushing it on this one. So I find complete on Forex course with certification recently. Okay, find the videos great, and also have completed a Forex course with the certification. Okay, Declan, great if you have done that. So one of the users who's attended these goes like, well, I have, and I have subscribed. So make sure that you're subscribing to both channels, not one channel, because sometimes the content is very different on my own YouTube and on AvaTrade. So making sure that you are doing both of them. No, I'm not pushing promo. I'm not doing anything. Look, I have nothing to do with this one. This is for me to telling you guys, to making you guys understand that where to get that information. If you are unsure about something, make sure that you ask questions from pros, and then pros will answer those questions to you. Think positively, think positive, because this is your time to really learn those ones. Anyways, let's carry on. So in terms of AvaTrade's unique technology, we have something called AvaProtect. It is a revolutionary one-click risk management tool available on AvaTrade Web Trader and AvaTrader app. And secondly, with AvaProtect, you can purchase protection against losses for a defined period after opening a position. If the position ends up, you have an open position that is losing, AvaTrade will reimburse those losses directly to you guys. Now, let's carry on with the respect to the next one. Activating AvaProtect, just the full process is right in front of you, or you can get in touch with your client managers and they will tell you how to use this particular feature. It's a pretty good feature. Now, in terms of today's agenda, this is what we're going to look at. So stay with me, and then now we're going to crack on this one. Right. Okay, first of all, we will look at measuring indices, because it is very important for us to look at whether indices are trading, which one is the lagging index, which is the strongest index. So lagging means which is the weakest index and which is the strongest index. We will measure that. And then from that, we will also look into sectors. From within that, we will determine, okay, which sectors are performing quite well and which performance are not performing so well as well. So special stocks under COVID-19, because COVID-19 is still very much the front focus, so we will cover several different stocks. We will, in streaming, we will look at Netflix, Disney Plus. In airlines, we will look at Boeing and Ryanair as well. In pharma, we will look at Johnson & Johnson and Pfizer. In online retailers, I'll look at Amazon, eBay, Alibaba. In energy space, I will look at Chevron, Exxon, Mobil, Shell, Total. Banks, I'll cover Bank of America, Citi, Barclays, and Goldman Sachs. We will all look at from a support and resistance levels. We will define where are the important entry and exit points, whether you should be looking at this particular asset from a going long perspective, whether we're going should be looking at from a short perspective. So shall we crack on it? All right, so let me bring out the MT4 platform, which I am sure that all of you guys are very much aware of, about this. So what I'm going to do is I'm going to cover the first few assets a little bit slow, and then we're going to pick up the steam because the concept is going to be very, very same. Now, some of you were commenting that why are we talking so much about YouTube? This is what I'm going to tell you why we are talking about YouTube. If you would have seen my video earlier in the morning, we talked about this particular sell-off in the market. At the time, Dow Jones futures, because this is your Dow Jones futures, they were trading up. They were trading to the upside. And I talked about yesterday as well that my qualm with respect to this particular index and why I think that there is a more downside risk. And then I'm going to explain it to you guys of why we are seeing so much downside risk in terms of this particular asset. Now, number one, defining some levels, first of all. So the in pink is your 50-day simple moving average, followed by that is your 100-day simple moving average, and then finally your 200-day simple moving average. Now, the question is going to be, why am I looking at these moving averages, not any other moving averages? The reason is because these moving averages, they work the best. During my institutional time, we have looked at these moving averages. Traders always pay attention to them, and this is where they buy and sell most of the moving average, most of the stocks. Now, given the fact that for the last month or so, the Dow Jones index has already kissed the moving average three times, the chances are, and as I explained in my previous videos, the chances are that we are going to break to the downside. So if you are trading the Dow Jones index, wait for that break to happen. The moment the break happens, what you can do is then put your stop losses on the 20-day simple moving average, which is right over here, because this is your Bollinger Band. And then within that is your 20-day simple moving average. Put your stop losses on 20-day simple moving average, wait for the break, and then go with it. However, on the flip side, if the prices return from here, then what you want to do is when the price breaks above the highs of today, then you wanted to take that trade. That's a breakout trade. And then you wanted to put your stop loss on today's low and then let this market run, let this market move to the upside. Now, in order to measure the strength of this particular index, we have to go onto a daily, onto our weekly time frame. Now, when we go onto our weekly time frame, what I'm going to do is I'm going to delete my Bollinger Band just to make things a little bit more clear on this one. What we have to do now is to look at the price, where the price is trading, and where the price is trading here and where the moving averages are. So number one sign, which is very is on the chart, is that 50-week simple moving average has crossed below the 100-week moving average, giving us indication that look, things are going to become ugly. Yes, ever since the price hasn't, we haven't seen that move. The prices, as you can see, since then, since the cross happened over here, since then the prices are still trading to the upside. And today, for the first time this week, we are seeing some sort of a sell-off. And in fact, the sell-off, this particular week sell-off, has already gone below the last 2 weeks. So we've already made a low, which is below the last 2 weeks. This is very, very critical. And in addition to that, this week's high, I know it's only Tuesday, this week's high, it was much lower than the 2 weeks high as well. So this is the high of this particular candle. So now we can see that yes, the trend has kind of started to lose its momentum, and now we're moving to the downside with respect to the Dow Jones index. We can classify that the Dow Jones index is going to see more reversal in the coming days. So the short trade that I talked about on the daily time frame can work really well. So now we will also go into the stock analysis and we will look into that. But before we do it, we will also look at the price analysis of the S&P 500 index as well, and we will do exactly the same as well. Now, with respect to the S&P 500 index, again, since December, this will be the third time the price is coming close to this particular 50-day simple moving average. But obviously, this is not close to 50-day simple moving average like the Dow Jones index. So this tells me that the broader stock market is still very much holding on to its strength. That is positive overall for the bull sentiment. However, if the price breaks below the lows of these particular candles, which were formed, on the 19th, and then again on the 17th, and then on the 15th. So these three lows are very, very important. So if we cross below these particular price levels, so let me just draw the lines over here. So this is the area. So if the price breaks below this one, then we can clearly say that, okay, look, you know what, that the prices are really going to take turn. The prices are going to move to the downside. A broader stock market, a sell-off will really continue from there onwards. So keep that in your mind, and then let's see how the prices will perform from there onwards. But the moment that I change the time frame, because we also have to look at the time frame from a bigger time frame perspective as well. So let me go to the weekly time frame. So when I see the weekly time frame, what I see is that the prices are trading way above the 50, 100 and 200-day simple moving average, which confirms that, okay, that the price is way overextended. We have gone too far, too fast. The price will reverse. It will come back to its mean, and that mean, my friends, they are going to be somewhere in around the 50-week simple moving average, or at least the 50-week moving average on the daily time frame. Where is the 50-week moving average on the daily time frame? The 50-week moving average on the daily time frame is going to be just over here, meaning on the weekly time frame we should be coming somewhere around here. So let me just go, and this is our 200, this is our 100-day simple moving average, and we know that this is very likely to break, in my opinion. So the mean is really going to be the low of this particular candle. At least that is the minimum mean that we are really looking at in terms of a price action. So we could see a sell-off that can trigger to the downside, but on the weekly time frame, the S&P 500 index does still look kind of very positive. And by that, what do I mean by that is because this week, number one, we have formed a higher high in comparison to the last few weeks. So we have formed an all-time high. Number two, another important thing is that the low of this particular week is still quite above the low of last 2 weeks, so which is where the 50-day simple moving average is on the daily time frame. So this means that we are still likely to continue to move to the upside. So S&P 500 index is not that so meaning the broader stock market is still not very much weak. There's still a lot of momentum left, but you need to be cautious because as RSI, the market it indicates that it is way overbought. It has gone too far. So that's what we've got to keep in mind. That's what we need to keep in mind. Right. Get rid of this. Now for the DAX index, what I'm going to do is I'm going to do exactly the same with the DAX index as well. On the daily time frame, we are seeing the pullback pretty much, and we see that we have already gone below the lows of yesterday, but the low before that is still very much intact, but we have formed a lower high as well. But on the daily time frame is where we're going to see a major index, major sign, and that shows that this particular candle is started to look a slightly bit more bearish now, but we are still very much on par with the bullish and bearish. So the candle itself doesn't really tell me too much because I don't pay too much attention to candle patterns. I look at the prices. Have we formed a lower low in comparison to the previous weeks? Have we formed a lower high in comparison to previous week? Have we formed a higher high in comparison to a previous week? Have we formed a lower high in comparison to previous week? These are the particular price level points that I pay more attention to, because whatever the noise is in the market, that doesn't really matter. Price tells us a lot of things, and right now the price is telling us that the overall sentiment in the market is still very much intact. Weakness is coming among the Dow Jones 30 stock, but overall market is still holding on to its strength. We need still a little bit more evidence before we can say that, look, the correction is coming in the stock market. Now let's quickly move on to our stocks, but I have spent a lot of time just talking about the indices rather than anything else. Has this made any sense so far? All right, thank you. Right, now we are going to move on to our stock performances and start looking at the stock index, the performance of these stocks. So what we will do is we're going to start with Bank of America first of all. Really analyze the price of Bank of America with respect to moving averages, with respect to everything, and then see where the prices are really going to be heading to. And then we're going to move from there. So let me just make this one like that. All right, okay. So on the daily time frame, first of all, we see is that we have seen a massive rally during the last few weeks since the price crossed above the 50-day simple moving average. But ever since, the price has, the 50-day simple moving average has been trading below the 100-day simple moving average, which was negative, and then it also crossed below the 200-day simple moving average. But since then, the price continued its journey to the upside. So the overall investors and traders have really ignored the bigger signals and they continue to push the prices to the upside. But on a weekly time frame, what we really see is that the weakness has started to creep in. Now what we are seeing is that the 2 weeks ago we have formed the top. After that, the price formed a lower high and a lower low, indicating that more selling pressure is coming. And that's what happened in this week as well. We formed a lower high and a lower low, confirming the confirmation of the trend, because that is the definition of a trend. So we are moving to the downside. The weaknesses is coming. The major entry point in terms of this particular stock price, in my opinion, is going to be somewhere in around 27 to all the way to 28. So let's see how the price will perform when it comes to in around these particular price levels, and then we can take a major decision on that. On the smaller term time frame, on the daily time frame, we are seeing continuation of this downward trend. Today we are going to see the prices moving much lower, perhaps challenging the 50-day simple moving average, because futures are pointing to the downside as we have seen it earlier. So I think the price may see some sort of a bounce near 29.75. It will not be meaningful. The meaningful is going to be in around these particular areas, or even slightly lower with respect to Bank of America. So conclusion, weekly time frame is showing that the weakness is coming in. Number two, we have identified our support, our buy areas based on a weekly time frame. Number three, we know that on the daily time frame, price is likely to challenge the 50-day simple moving average, and moreover, price is also going to fall below the 50-day simple moving average. If it remains below the 50-day simple moving average, that means we will hit our target, our support zones. If they hold, great. If they don't, then the price is really going to move towards the 100-day simple moving average in around that support area, which is bit 27.25. If that doesn't work, then we will be moving towards the 100-day simple moving average that is trading at 25.65. So that is pretty much the analysis on Bank of America. Now let me look at the next chart in relation to that. Let me see if I can bring Goldman Sachs, and we will bring Goldman Sachs over here next to Bank of America. On the weekly chart, we have seen a massive sell-off last week, clearly, and the week before that we formed a top. Great, so the continuation of downward trend. This week we are seeing pretty big sell-off once again, and today we will see even more big sell-off. Prices are, no doubt, they are away from their mean for a long time, and 50-day simple moving average is not showing us any bullish sign for the time being, because what we need to see is we need to see 50-day simple moving average crossing above the 100-day simple moving average. If that happens, then we can potentially see some entry points, but for the time being we don't really see it. 241 to 247 remains our first potential entry point. Now we can define that entry point a little bit more. So what we could do is we could define this entry point where the 50-day simple moving average is trading, and then see where the explosive move happens. So I'm picking up this particular price action because this is where the explosive move happened. Some of the consolidation also happened. I can actually just make the price go lightly. So this is the consolidation area which I'm really looking at, which was retested by the price right over here, and then we saw the explosive move to the downside. So overall, in terms of a Goldman Sachs, we are seeing continuation of the downward trend. Today, we will see another big move to the downside for Goldman Sachs, because the market futures are trading to the downside. And this means that the prices will move towards the 50-day simple moving average. So this is your support area or your potential buy area with respect to this. Now, let's move on to Netflix, the streaming services. In terms of that, obviously last week we had, we had earnings from Netflix as well that pushed the prices above its all-time high. As you can see, the price broke out of its previous all-time high right over here, formed a new all-time high. That means that we need to readjust our old resistance, and our new resistance is going to be between 580 to 591. And this week, obviously, we are well off the all-time high, very, very much low. We need to break below the last week, because last week we saw some serious sort of a price move, because price moved from 494 to nearly $600 pretty much. So that was a very, very big move. So in terms of a price move, what we really, like the big support zone for those traders who want to practice patience, you wanted to let this particular support zone stay where it is, which is 452 to 462. Yes, if you really want to be slightly more aggressive, then we can say is 476 to 462. That could be your first area of support, but anything above that could be slightly risky, but it can be good beneficial for those traders who like to take a little bit more risk. And for them, the support area, in my opinion, is going to be just the gap, the gap of this one. So we need to complete this gap. So what we should do is wait for the price to, today we're likely to break to the downside. So if it does, what you could do is you could put your stop losses as an intraday time frame basis, stop loss on top of this particular candle, let this trade to complete this gap, and then run all the way to the downside, and then maybe try to get into the price action somewhere in around where I have marked them on the chart. So let's just say 506 to 513. So that is the area that we should be looking at as your support area. So this is your support area number one coming from your weekly time frame. This is your support area number two coming from your daily time frame. And this area is for those investors who like to take a little bit more risk. This is for those investors who like to take very little risk. Now we will move on to Johnson & Johnson. With respect to Johnson & Johnson on the weekly time frame, of course, we had the earnings and all of that. Prices are very much consolidating. There is no particular move, so there is really not much happening. So we will just, sorry, in terms of Amazon, I'm sorry, I don't know why I keep on saying Johnson. Amazon, in terms of prices, are very much in a consolidation zone. This week we have formed a new high, which is, a high which was higher than the last few weeks. In fact, the high which was formed above in November. So we have crossed that, but let's see if the market can really continue. What you could do is, under the current circumstances, is really wait for the price to come into any of the zones and then probably take the trade. Right now, there is no trade with respect to Amazon. Now for Johnson & Johnson, obviously we had the earnings. It's very much of a COVID play. The market has gone a lot more higher. In terms of moving averages, there are no moving averages on this one, so I will put the moving averages on the chart. So we will go over here, and then we will put the 200-day simple moving average. Then we will go over here, put another moving average, which will be 100. We'll change this one to 100. Change the color to yellow, because that is the color that I really like to keep for 100-day simple moving average. Then we will put another one, and trend, again moving average, and then we will change this one to 50 and change the color to pink. There we go. Obviously, the prices are trading way above than this one. So in terms of a trade, what we really wanted to see is we wanted this gap to be filled. So the immediate support zone really is going to be where the 50-day simple moving average is trading. So I will not change that one for the time being. I will just readjust it slightly. So I will keep it with 152 to 154. But one of the trade which could be that if you wanted to put your stop loss above the high of this candle and wait and close this gap, this is 1-to-1. So this much is your risk right over here. So let me bring out the pen to show you that how big is the risk on this one. Sorry, give me a second. Okay, so in terms of our risk, what we have is we have this much in terms of risk, and we have this much in terms of profit. So it's very much 1-to-1 risk to reward ratio. So you will put your stop losses on top of that one, or you could be slightly bit more smart with that as well. So what you could do is you could go further into a smaller term time frame, and you can go into a 4-hour time frame if you wanted to take that short trade on this one, and really put your stop loss above this 4-hour candle as of yesterday. So maybe put your stop losses at 171 and then wait for and let this trade finish this gap, because we need this gap to be completely closed. Now with respect to Boeing, beautiful, the prices are moving to the downside exactly as it expected. Now the prices moved below the 50-day simple moving average as well. The next important area of support, let me check the weekly time frame what exactly is happening. Nice, the price has moved lower from its previous resistance. We are consistently pretty much forming lower lows and lower highs. So the immediate support zone in terms of a price could be where the prices are really, at 174 to 178. However, we could look at somewhere slightly bit more better. So it could be 174 to 184. I think I like that price level more because this is where the explosive move happened as well. But of course, the better area is going to be much below, or in around the 142 price level. On the daily time frame, let's see how this one lines up. So this one encompasses my 200-day simple moving average and just below that 100-day simple moving average. So overall, I think this is your support level number one. This will be your big time support level if the price breaks all of these levels, but I'm expecting some sort of a bounce to come in around here. Now, of course, folks, we have gone way above the time that we've discussed. Let me just look at some of the questions where I can see the recording. If anyone wants to see the recording, it will be on my YouTube channel, which I've shown them before. I can show you guys those YouTube channels again. So again, on my channel, Naeem Aslam, if you're subscribed, you will get the notification. On AvaTrade, again, if you're subscribed, you will get the notification the moment these videos are uploaded. So Declan is asking, is this an overbought situation? Bank stocks are volatile due to high unemployment, poor performance. So do you agree? Yes and no. A lot of that is happening because of it as well. But also what we all need to keep in mind is that economic recovery is taking place. And that means because if you look at the situation, if you have listened to our video today, what we talked about that the coronavirus restrictions are easing off over in the United States. Some of the states have already loosened up some of those restrictions. So the more vaccine people are getting, there's a less sort of that restrictions we see. That means economic recovery will come back, and then the more economic recovery will come back means these banks will have less default loan rates, and that means higher prices in terms of bank stocks as well. So overall, I think you wanted to stay overweight, you wanted to stay long on banks, don't want to short them for a longer term perspective. All right, folks. That's all for now. We've gone way above over time, so I'll see you guys next time. Thank you.